Morning traders, welcome to today's video. This is your Bitcoin update for today, and the date is Wednesday the 12th of June 2024. So we have had another drop down yesterday. Clearly after yesterday's update, we did see that further move to the downside. It got very aggressive at one stage and had a reversal that was pretty much not in the middle of nowhere. We were looking at 66k to 66,500 was the zone. And this was a level that we have been speaking about as just an area where there has been just real nice confluence. It is the midpoint of this whole channel that we're looking at. So if we do go from the first low that we put in over here, all right, you can't see it because my head's in the way. The first low, you extend that across, you go all the way up to the highs. This isn't the cleanest channel in the world because it's one of those, but look at where that midpoint is. Okay, right there at this 66k area. And we have, of course, had that bounce from there. Now, this isn't the first time we've had that. The range has been split into these two halves for quite some time, right? Let's just make this channel a little bit clearer. That's better. That's better. Right. So yeah, the range has been split into these two halves for a while now. So we've had obviously the big range that happened back in March and April. And then we dropped down and we did mini half of the bottom half of the range and started to fill out that space down here. Then we had that change of market structure, and now we're back at the top of the range, filling in the space up at these highs here. Now, this for now, I do consider, so it is one big range overall, but we can split it into two. So as long as we are trading above this midpoint, above that 66, this is why I was saying 65,600 would be the lowest that I would want to see it go, because this was the lowest point of liquidity that we had internally before we start going into this gap. This being the POC on perps, it isn't on spot. That point of control is higher. But what we will probably find if price does continue to consolidate around here is that the perps price starts to, pardon me, the perps volume starts to build up around this area once again, and we do see that point of control shift back up to this 67,500 kind of area. So that is what I'm anticipating. I didn't really want to see any closes below here. Of course, we have been speaking about 66 in the chat for a while. French Bull had that as his main target. So for those of you who are in the crew, or for those of you who are not in the crew and would like to join, then French Bull's main target for this correction has been, and has been for a while since we've been up at these highs, 66k. Now that is simply playing this range, creating some kind of flat here before we do go on to potentially see higher prices. So the bounce we've had is decent. All right, we came down, took out a few lows, ran a load of stops, hit a load of liquidations. Sentiment was as if we just collapsed down to like 40k again. It was incredibly bearish yesterday. It was a little bit stressful because, of course, alongside all of this, we had altcoins dumping even more. And this will go into another part of this, another video that I'm going to upload later on why I think a lot of people are just completely fed up with this market as a whole, because although we've had decent price action on Bitcoin, altcoins have just been awful. And unless you're in the meme space, which I consider to be a different market altogether, there just really hasn't been that kind of price action that like any of us would like to see, the kind of price action that you can truly profit from these markets and go in big on these long-term plays. That just simply hasn't been happening. However, we're here to talk about Bitcoin, and the Bitcoin price action has been relatively nice. So this has, the last two trades I've taken, I have taken a long. now, and it's more of like one of those that I've been scaling into and compounding the long from the long that I'd taken at 57, compounded once again at 61, and I've compounded again here at 66. I hadn't compounded this long throughout this range so far, so I'd allowed these dips to happen. I had been taking profit on this long, but because we hadn't taken out the all-time high, I wasn't really considering this to be an opportunity to compound yet. I was thinking that we could go and take out the all-time high, then correct again afterwards, and just keep on going with this choppy market, and then see an opportunity to compound maybe around that 64. I was very much open to the opportunity that we would get a move down. Right, I was very. I mean, I was adamant it would be unusual that you just see this go down and then all the way up. All right, it would be some kind of cup and handle thing. That is essentially what we're playing out here, even though we have this bigger range going on. But I was thinking, even with that, there could be an opportunity for some like messy price action afterwards, because it's the summer, because of everything else that's going on, and so on. However, we have had this move down now, and there have been opportunities to get into that. So I did take the short up on these highs. I wasn't expecting the extent of downside that we had. I wasn't expecting this to just collapse as much as it did. So I closed this one early. And then we had another short opportunity that happened afterwards. So luckily, this one was much easier to catch. Okay, so from a 4-hour time frame, which is what I really like to trade, we could see that in order to have any chance of even being bullish again, this had to gain acceptance back below, or back above, sorry, what was previously support, and then obviously has now flipped into this resistance here. So we came up, we didn't take out the highs, but we came into the lows, closed back below, providing another opportunity to take a short position. That hedge is the one that I was running throughout all of yesterday. And once again, I have now closed that because, and this is often what I do with hedge positions, I do have a more of a long bias towards the market, and I prefer to take long trades. My win rate and my profitability is higher. Probably because I closed shorts too soon. Maybe I should just focus on holding them for longer. But what I often do with shorts is they are to cover, mainly to cover any losses or any stops that I may have, and to be able to pay for a new long position, essentially. So I had some altcoins, they got stopped. That gave me some realized loss, but the short position did more than enough to cover that. So essentially, I didn't make a loss. I was just kind of net neutral at that stage. And then it also paid for me to take a long position without having that risk. So that tends to be what I use those shorts for. What else can we say? What else can we say about this? So where we are bouncing now, daily open is a very narrow range for today. So we have, of course, our daily open. Price came down, and we've just tested into where we had that real high volume. So that final flush yesterday. Now, I don't know if this is enough to consider this a V-shaped recovery, but we have come back. And you can see here, it was just choppy, bang, take out the lows, reverse it, holding back where we previously had that support that it was attempting to hold throughout yesterday. And this is when Ethereum was also holding, and there was the opportunities there with Ethereum. We'll go over onto Ethereum in a minute. And so far, just, still beneath that monthly open and beneath that previous week low. Now, on the Discord, if we go over, and if I just bring this up here, then on Discord, I did mention this yesterday. So I said monthly open backtest here, big moment, longs will be trapped here if not already wrecked. Okay, so this is when we were looking at this move. We had the bounce, and at this point, for me, that was looking like a better short opportunity. I wasn't trading it at that stage. It was quite late, and it was a crazy day anyway yesterday, so I didn't really want to be trading that. But naturally, that monthly open is going to be big resistance, because what has it been for such a long time, right? It is just holding, it was holding, it was holding, it was holding. There will be long positions here. It was trying to hold on the move down. There were long positions opening. We were covering this in the morning, right? When I was doing my stream, we were around that monthly open yesterday when I did this update video yesterday. And we could see that there were longs opening. We were getting that bearish CVD divergence. We were getting that net positive delta without it being able to affect price, without it being able to get that bounce. And then we've dropped down. So there are longs trapped here. That naturally will create sell pressure because those longs are going to want to get out break even at this stage. However, if we can get back above it, if price can, I say we, because I'm on Team Bitcoin. So if we can get back above here, hold that previous week low, hold that monthly open, then we could in fact see a very, very quick recovery that takes us all the way back up towards 69,420, right? Because that is the point in which we started to drop down. So if you look on here where your single prints are in the chart, they are literally right at 69,420. So we're probably going to end up revisiting that again at some point fairly soon. There is a FOMC today. So get your calendars out. Be aware. FOMC, big day. We also have CPI today. So that is going to happen before the market opens. So just a few hours away from now, we do have CPI. Then later on this evening, we do have FOMC. Two pieces of massive, massive, massive news in one day is going to get choppy. It's going to create some craziness once again. If we didn't have a crazy enough day yesterday, today is also going to be pretty crazy. What has happened previously on every single occasion where there has been FOMC, I am going to zoom out. I'm going to find the chart that I did this on. I don't know why when I'm streaming, my charts take so long to load. But let me just bring this over here. Here we go. These are the last FOMC events. Okay, so I plotted the last 4. And of course, today we have another one. Now, you go back to December, there was a 7% drop before a move that rallied over. After that drop, within the month subsequently, a 22% rise that made new highs. In January, the first one of this year, we had a 5% drop. And then what happened? We rallied to make new all-time highs. In March, we had an 11% drop the day before FOMC, and then we rallied back towards the highs. In May, on May the 1st, we had the drop that took out the range lows, and then what happened? We rallied back up to almost make those new all-time highs. And what has happened so far today? Now this, when I was writing it, was just a 5% drop yesterday. It is still just a 5% drop, so it's not actually been as terrible as it was previously. You can see back here we had, I said 12%. Maybe I was thinking about the drop you have into it, like that whole drop. So essentially we've had a drop off within this week of 8% as we go into FOMC. What has happened on the last 4 occasions? I hadn't plotted any previously just because I wanted to fit enough on the chart. The ones that happened previously were just within a bull run anyway, so I think it was just flat. And then, I mean, I could find the date. If anyone knows the date, have a look at it, do your own research, backtest it for further. But there's a few data points for you. And for the year so far and for the trend that we're in, I wanted to do everything since the bull run. And this has essentially been every FOMC since we've been like properly bullish. Right, if you go back to when we were in a bear market, clearly FOMC is going to react differently and be a different kind of situation. But since we've been in a mad bull market, this is what we've seen: drop into FOMC, and then we fly afterwards. We literally just fly afterwards. It has been big moves, immediately recover the losses. Okay, on every single occasion, more or less immediately recovered those losses. All right. And then we make new highs after that with at least a 20% rally. Will it be different this time? Will it be the same this time? We don't know. That's the beauty of the market, but we play the probabilities, and that is something that I think is really interesting to note and to be aware of. And if it happens again this month, then it's going to be an amazing thing to be like, oh, well, that happened then again. And then we've got 5 data points, and yeah, you get the idea. So what does that mean for today? I mean, if we are going to get this, I do think there's more downside that could happen. We could well swipe those lows again. We are still below this monthly open, so we could come down and we could take those lows once again. What I would be more inclined to say is most likely is if you are flat, if you're not in a long, we do have really nice Asia lows down here, right? So go on to your lower time frames. I mean, I'm on a 30-minute, so it's not particularly low time frame here. But we had, of course, yesterday Asia, and then London traded below Asia, and then New York traded below London. That's unusual. That doesn't happen often where you just have one of those just one directional trading days. It is likely that we go and search back up into those areas from yesterday sooner rather than later. And yeah, if I was to anticipate a move for today, I'd say let's stay within this range. Maybe around that CPI data, we get that move down towards 66,800 that takes out those Asia lows. Can then look for a bounce and then see what happens around FOMC later. FOMC is probably going to do something like this, right? So be aware of it. It's going to cause some choppiness, not only on Bitcoin, but also on other markets. It's just going to be like, yeah, it's hard to call. But what you can do, like look to fade the first move, all of these kind of strategies. I'll probably go live again later. So I'm live now. I'm going to be doing a trading room later, and then I'm going to be live again. So it's going to be a busy, busy day for me. But yeah, that's essentially what I'm looking for. Now, what we also have here is something else to be aware of. What I was saying about completely one-sided price action. There is a wickless, an entirely wickless 4-hour candle. Now, every time this happens, it does get cleaned up. Again, sooner rather than later. I would be anticipating a move up at the very least to 68,500 at some point today. If that is after FOMC, I think there's enough to swipe these Asia lows and to come up towards this 68,500. If I was to look for a target for this move, that's the main area I would be looking for. So the basic like idea of this is that when you have a move that is just so one directional, and this being that only sellers were even involved at this point, there's no, it does create a big inefficiency within the chart, okay? Because at this price, at this exact price here, at the 68,440, there were only sellers involved. There were no buyers within that market at all at the start of that 4-hour candle. So the market is likely to go and complete that auction and to balance it back up again. And it's just simple auction market theory. I did a tweet on this. I did a thread on this, which explains that in a lot of detail. I could bring that up in a bit. I'm on a stream. I'll bring that up in a little bit, but go to my Twitter and you can find it over there if you want more information on why this is likely to happen. But that's probably what I'm looking for, is like the main trade for today. So we go down, we can have a look at something like this. You want to see these lows hold from yesterday. I think it starts to get really sketchy if they don't. It's not the biggest R trade in the world, but what you can do is look for an SFP off of those lows and give yourself very low risk. So let's say if CPI happens and we go poof, and we just pop into those lows, and then we hold for a little bit, you can look for a long position maybe from here or something and trade it up towards these highs. That would be a first take profit. And then you can extend that all the way back up to that 69,420. And then if we're back up here, then you may as well just let that run, because the likelihood is if we recover all of this, we're probably going to hold that monthly open again if it does come back there. And then we're going to be looking at this being more bullish again. If bearish scenario, this has been a long update video again. I apologize. I don't know why I do this so much longer when I'm on a stream. But there is a lot to discuss, and I hope it is useful for everyone. If we do get a situation where we roll over and we get acceptance down here, so if we start closing those 30-minute, 1-hour, 4-hour candles back below 68, especially if we do drop during CPI and then we don't immediately bounce and recover, or if CPI is just chop and then we get this move at FOMC, I don't know when it's going to happen. I just think it will happen at some point. But if we do get that acceptance down here, it does start to look bad, right? And then you would be looking for those lows to go again. And that's when it becomes a little bit difficult. I don't think today is going to be an easy day to trade. It would be lovely if we can take these lows and then move up towards these highs, right? It would be really, really nice. But the market's unlikely to give you that much of a clear trade right now, given everything that's happened over the past few days. Even though it gave really easy trades on the move down, right? Longs are generally a lot more difficult to get into. You have to be a bit more patient with long positions. They're a little bit more crowded. Short positions, you just go bang, short, done, poof, market drops. Easy peasy. At least recently, right? You've taken these two short positions, easy peasy. But yeah, I think looking for a long, something along these lines today. I'm going to draw it roughly on here. Let's say, I mean, your invalidation's likely to be somewhere down here around 66,400, because if you start messing around with these, you're going to go to the lows anyway. And then you got that as your first take profit. And then you've got this, which takes you back up towards here. Is there anything else that we can discuss on this chart before I wrap up? If I add the TPO onto here, let's take away the market sessions. Let's add on the TPO. We have tested yesterday's volume POC. So we've cleaned up that naked point of control. I know it's a few dollars lower, but I think that's enough of a move down. And of course, if we do get this situation where we do come and take out these lows, then we will definitely have tested the previous day point of control. So that's good. Obviously, the reason why the POC is here is because of this candle right there. Okay, that's the point, 66,800, in which there was big aggression to the downside, and then you immediately reversed it. So if you were to look at the footprint here, there'll be huge volume here and here, which is giving you that POC from yesterday. The time point of control's not far off of that, so we have tested that as well. And this lines up really, really nicely. What do we have up here on these highs? Okay, time point of control from Monday, volume point of control from Monday at 69,420. So TPO's lining up, volume's lining up, the levels themselves are all lining up. And in fact, I think if you were to draw some fibs and you go down here, well, would you look at that? If we take out those 4-hour candles, it's also the 618. So everything's lining up. The confluence is there. All looks pretty good, pretty tasty to me to be seeing a move like that today. The only thing I wouldn't want to see, like I said, is don't want to see that deep retrace that comes all the way down here, because that would be kind of crap, right? So that's probably enough. That's enough for this Bitcoin update. I've not even checked the order flow. So let's throw it onto here and just very, very quickly check the order flow. How am I doing these like 30 or 23 minutes? Obviously, a ton of liquidations yesterday from long positions. There is a lot of shorts we can still squeeze above 70k, right? So there are, within this entire range, it has been negative delta overall. I'll show you that in just a second. So I do believe that we're still going to new all-time highs. It's just a case of whether we're going to new all-time highs from this very point right now, or whether we do need to chill out a little bit longer, maybe go to 64k first, and then go and take those highs afterwards. So I'd like for this to be the low. Or I'm positioned for this to be the low. So usually when I am positioned for it to be the low, it is the low. It does hold. I'm pretty good at doing that, but we'll see. ETFs yesterday, of course, we had outflows. That's natural. It's all very neutral there. Nothing too much to discuss within that. Now what we have a look at here is, so far today, we're seeing real healthy spot buying. So a spot buyback, whereas perps have been a little bit more bearish. So this is a 10-second chart. It's a little bit too zoomed in, but this is the type of reaction we wanted to see. Throughout yesterday, we were seeing the blue line down at the bottom, okay? Blue being the spot, purple being the perps, pink being perps, whatever color you think that is. Spot was leading the move down. You can see it was extending below those perps, and we did get that that premium where, yeah, essentially spot had been trading, like leading that move down. And then right at the end of the move, perhaps then just capitulated. And now we're seeing continued selling from perpetuals. And we do actually have some divergence here. So if we look at this low here, and then this low here is lower, right? So we are building those bullish divergences, and we are seeing spot buying. We are seeing a spot recovery. So far, it's early stages of this recovery, but it is looking a little bit more promising now. And if you do zoom out, this is what I have been talking about, right? From within this entire range, okay, like literally the entire range, we have built this range on increasing open interest and decreasing delta. So we have lower delta than we had when we came into this range all the way back in February, March. We have higher open interest than we did back then, lower CVD, which shows us that there are enough short positions within this as a whole. It's a very generalized statement, but there are enough shorts that we can really start to potentially, maybe, just get a big bullish squeeze going, maybe after FOMC today or maybe in a few weeks' time. We will have to wait and see. So that is that. Anything else? So this is what I mean. Okay, you can see that increasing open interest on decreasing delta, but price is still maintaining this higher low structure. So that's all right. And this has been interesting over here. We are back into that spot premium, which means that perps are trading lower than spot. So the shakeout has worked. Perpetual contracts, traders trading futures on leverage have forced the price lower. Which is actually a healthy thing, okay, because it shows that they're a little bit wrecked and that it has to play catch up. Spot is healthy, spot's been maintaining and has held that bid, whereas perpetuals haven't quite so much because it's thinner market. We do have that spot premium over there, and naturally what that means is that we're going to have negative funding rates today. So if we go over and have a look at the funding rates, they are going to be negative on a lot of these majors, negative to neutral. So Bybit giving us negative funding, BitGet giving us negative funding, and generally, what that has meant, every time we've had this these spot premiums, it has led to a move up in price. But okay, it could stay like this for a long time. So it's early days. We have to be aware of that. But that is that. I'm going to stop this right now before it gets to 30 minutes because I had a comment on the video yesterday being like, what happened to these like nice short 10, 15-minute videos, Luke? I liked those. Well, learn to get your attention span back to what it was 20 years ago before the world of TikTok. Watch these effing videos because there's a lot of alpha in there to share. There's a lot of information in here to share. And I want to share all that information with you. And this is how long it takes to share all that information with you, even though I do waffle a little bit. So stop with the goldfish brain. Watch the videos. If you haven't watched the whole video, comment below. Thank you very much for watching. I will see you again tomorrow in the next one. And yeah, have a great day.